A very good afternoon to all of you. On behalf of Jain School of Global Management, it is my honor and privilege to initiate this panel discussion on a very interesting topic related to the future of uh, currencies. And we have with us a very illustrious panel consisting of three very highly experienced gentlemen. Let me just take a moment to introduce them to you. We have with us Mr. Harish Jani, who is a managing partner at Harish Jani and Associates, also founder and partner at Univen Advisory. We have with us Mr. Vikram Pandya, who is the director of fintech at SPJN School of Global Management. And we also have Mr. Alijo Joseph, who is the founder of Finovate Capital, and proud to say that he is also a GMBA alumni. With this, let me try to gather some initial thoughts from our esteemed panel about the overall theme of our today's discussion is digital currency, the future. Digital currency has been a subject of debate and curiosity ever since this phenomena started. So we have with us this amazing panel of experts to help us explore through the various dimensions of this emerging phenomena. The very first question which I would like to put across is about the rise of Bitcoin itself and various other cryptocurrencies that have created challenges for the governments and central banks, and how the government is preparing for this boom in digital currencies. So, can I just go across and call in Mr. Harish Jani to share his views on this? Mr. Harish, over to you. You're on mute, sir.
Still not audible.
Yes, still not audible.
Hello?
Yes.
Yeah, now you are audible.
No, again, I think it's on mute.
Again, you are on mute. You are on mute now.
Mr. Satoshi Nakamoto.
Yes, go ahead.
Yeah, Mr.
Yes,
Satoshi
absolutely.
Nakamoto, who is anonymous person, claimed to be anonymous person, had issued exactly 13 years back a paper on Bitcoin blockchain and how the coin has been introduced. Today now it is 13 years back, exactly in 2008 or 9 he had published his paper in October itself. So we are 13 years after that. So that Bitcoin slowly became a more and more popular, and because it provides anonymity, it provides a very fast peer-to-peer payment system, and because it's being on blockchain, there is a trust factor involved. It started with the first cryptocurrency, you can say, making popular, and slowly it gained popularity, and more people started world over using it. That was the beginning of a cryptocurrency era, we can say. Subsequently, more cryptocurrencies like Ethereum and others have joined in the fray, and now today there are more than about 8,000 cryptocurrencies, I think, are listed on various stock exchanges, crypto exchanges world over. And further adding to that, these cryptocurrencies have posed a challenge to central banks world over because of the popularity being gained by cryptocurrencies. There are various benefits available, which led to central banks thinking of whether they should do something on it. And further, because of digitalization, lot many startups coming forward, and people, general public, being aware of what benefits they can get because of digitization and other facility, efficiency, and because of all such efficacies, they were more prompted, and pressure came on the central bank for challenging their sovereign function. As such, further after the last war, you can say the Libra project, now DM, from Facebook, which started to come in the competition, central banks world over got a shivering thinking that their main important function of managing payment system would get disturbed. As a result, they started thinking, and the thought of the digital currency in the form of CBDC was mooted.
Thanks very much, Mr. Harish, for sharing those insights. Aljo, can I quickly call you into this discussion and ask you to share your views about this, please?
Yeah, I think like Harishji summarized, I mean, it's a emerging field, and everyone's looking at this with a lot of interest, right? Because it's not just about crypto, or it's not about currency itself. I think the future of humanity itself is going to be linked to this very intrinsically, and I'm sure we'll cover those debates as we get into the discussion in a little bit more of detail. But yes, I mean, the chronology is right. Essentially, there has been an independent currency called Bitcoin. Some countries look at it as an asset which you can trade against. Few or only one, right? El Salvador has made it an official currency. Now, with the nature of currency is stability, right? Because I mean, when you buy something and you ascribe a value to it, you want that value to be constant. If not constant, at least not declining, right? And essentially, that's the challenge that you've got to look into more deeply when you want to kind of make this currency of some sorts, right? So that's the argument against making Bitcoin a currency, and we'll get into details subsequently in terms of what are the risks that somebody like an El Salvador runs at this point. Now, having said that, by the nature and definition of a government, you should be able to govern, right? If you can't govern, there is no point calling yourself a government, right? So with the rise of cryptocurrency, the fear that most governments had was that you could now start moving money out of the country into an alternate asset, right, which was not trackable. Part of it was true, part of it is actually not so true, right? So we'll get into details of how it helps more traceability, all of that as we go on, right? Now, the other piece is, ultimately it's going to come down to fundamentals, right? What exactly is a country, right? So when somebody like Facebook, that's got 2 billion users, decides to issue a currency, then is any closed group good enough to issue a currency, and how does that affect sovereignty of nations, right? So I think this is largely what led to the thought around central bank issued digital currencies. Beyond that, there are many other benefits, right? And I will get into that subsequently. Let me not cover everything in one single go. But largely, yes, Bitcoin, most countries are going to treat it like an asset. Some of them who've got a remittance based economy, at least initially, might look at it as a legal tender to that extent. Uh, yeah, and clearly, as an asset, there is going to be a debate around how do you govern it. People don't like government getting into every transaction that goes out of your wallet. So to that extent, how Bitcoin is going to provide them the comfort is something that we are going to look at very closely. And if Bitcoin is going to provide that kind of comfort, then what really is the value of a Bitcoin is going to be questionable again, right? So I think it's a very interesting space. And let me not take more time on this one. We can obviously peel the onion layer by layer.
Sure, indeed, it is a very interesting space and getting more interesting with time. And as you have rightly highlighted, the issues related to governance and sovereignty are of utmost importance. So certainly, we'll loop back into these issues. Let me just call in Vikram now and request him to share his views about the impact of CBDCs on the cryptocurrency landscape. Also how these are different from cryptocurrencies among themselves. So the role of CBDCs, Vikram, would you like to share your thoughts on this?
Sure. So before we start, I think we need to take a step back in order to understand, first of all, what is that this cryptocurrency wanted to solve as a problem, right? So when you look at problem statement that they wanted to solve was creating a decentralized distributed environment to ensure that you can create trust by not trusting anyone. Today what happens, right, whenever you look at digital trust in today's era, all the trust that you get is augmented trust through some third party, whether we are right now talking through this StreamYard platform. It is again trusting on someone that they will work. When we are doing any financial transaction, we are trusting on our browser, saying that okay, first of all it will share the data correctly, and then you have this SSL certificate provider who is in fact certifying authority, making sure that this transaction will go through. And we are trusting almost every time all the other party through someone, and that through someone is as an intermediary is going to create an ecosystem around which everything will work, whether it is a bank, whether it is insurance company, brokers, whatever. Now, cryptocurrency wanted to remove this intermediary because once you have too much power, then you can get corrupted. And that was the issue that they wanted to focus on, saying that, okay, I don't want to rely on anyone. I want to rely on algorithm. I want to rely on computer programs so that there cannot be any corruption. The transparency is there, governance is there, and accountability is there. That was the original idea behind how which the cryptocurrency started. Now, after that, what happened? People started using cryptocurrency for multiple purposes. And as Elijo earlier mentioned, you have multiple different companies like Facebook, Amazon, with huge customer base. Today, Amazon has already one token called Amazon Coin that is right now working in US, and it is similar to Reward Point, where you can just buy in bulk and you can use it within Amazon itself. But if Amazon itself is so huge that it can allow you to use that currency with all the partnered ecosystem, and that ecosystem is such a huge ecosystem that you don't require anymore the traditional legal tender, then in future you may find some issue. And the issue became more and more prominent when different projects started coming. DeFi, which is decentralized finance, became almost all-time high with almost $100 billion. Now, when you look at all these different parameters, people need to think that how you can add the same benefit of crypto, of decentralization, or let's say distributed environment, but at the same point in time you want to have that trust by the government, and government can provide certain things. So government can have public permission network in a way, that public permission network on which the cryptocurrency you can add, and that cryptocurrency you will call as a central bank digital currency because it is backed by the central bank. And as the nomenclature says, it is not fully decentralized, it is public but permission, which means that who can issue that, who can control that, who can monitor that, that entire life cycle is managed by government. So with this background, let's look at the impact. Now, whenever government is coming up with crypto of their own, which is CBDC, that crypto will not directly replace the existing crypto. Why? Because those are decentralized crypto ecosystems. This will in fact enhance the way other countries are working with that, because this becomes one more fungible way of trading and transacting. In short term, you may find some pressure, but in long term, it will in fact evolve it further. So you have more transparency, governance, etc. Along with that, you will have few more advantages, which you will see later, because there are many more advantages of central bank digital currency vis-a-vis a traditional cryptocurrency. You have disadvantages also. So we'll see all those things later. But in a nutshell, as I mentioned, you will have very little impact in the long run, given that these crypto ecosystems are independently working and they are not related to how the CBDC works. However, if let's say governments come up and say that, okay, because my CBDC is there, I am not going to allow any crypto. If entire global government says that, then it will have impact on the white economy, which is on the crypto white economy of the crypto side. But black economy will thrive and survive because, in fact, it will further get boost because government is blocking it. So all those things we need to think about.
Very interesting perspective indeed. This actually brings me to another related aspect, and Vikram, I would go back to you now again to perhaps gauge. Various central banks see the advantage of financial inclusion through CBDC in a country, especially with many remote and poor areas. But at the same time, they are also concerned that the digital currencies could undercut the role of commercial banks in the economy, for example, Indian economy. What are your views on this?
So we need to again understand and go back to the original definition of CBDC. CBDC is in a way centralized. It will not undermine the role of central bank or the commercial bank because they are the part of issuing ecosystem. So they will not get undercut in any way, but their role will be different. The way right now we look at their role is to not only issue and manage, but their role is to then further leverage certain things and let's say loan it out to people, right? Now with CBDC, what will happen? Once you have issued that, that crypto is traceable. That is something you can monitor how it is being used. And let's say recently you have seen e-rupee as a concept which we have started, but that is not crypto. But let's assume that on CBDC, if you start something similar on e-rupee front, then you can also monitor the end use. In this scenario, what may happen, because you want to ensure that there is no corruption, the entire benefit that you want to transfer as a government, CBDC can allow you to track and trace that to the end user very clearly. So DBT that you are referring to can be monitored and transferred. Then you have another advantage of routing it at the source, right? Today also in multiple different countries, even in India, you have payment gateways providing service for you to route the payment at the source. This allows you to reduce the complexity. Today in GST environment, whether you have received the amount or not, you are supposed to pay immediately to the government on accrual basis. So let's say you receive from the customer after 3 months, but immediately next month you need to pay from your pocket, and that has the stress on working capital. Now, because of CBDC, you can in fact monitor the entire thing. Hence, you don't need to pay anything unless and until you are getting paid. Because at the source itself, when somebody is paying, all these things can be divided, including income tax, wealth tax, whatever, and then you can keep on claiming. So it is the wallet which will get adjusted dynamically, and you have certain advantage because of that. Now, when you compare and look at the two different side of it, one is your CBDC by central bank and banks versus this cryptocurrencies that already is a part of ecosystem. What will happen? You will have certain decentralized use cases, including DeFi, which will allow you to identify how multiple different new innovation can come into picture. For example, you will have offline payment option. Today, offline payment ecosystem is not that available, where you have without any network, without any smartphone, you want to create offline payment system. RBI recently through a sandbox, regulatory sandbox, had created this idea of allowing different startups, fintech startups, to start the offline payment. You have a couple of them starting with that, but blockchain can make it more secure, and hence CBDC will make it much more seamless and secure. So that's the reason you will have a different new innovation and disruptive business model coming up because of CBDC. Over to you.
Thanks very much, Vikram, for wonderfully explaining this perspective. Let me now go to Aljo and invite his views on the same question, which we are trying to explore, investigate about, various advantages and financial inclusion, and also the future role of commercial banks, especially in Indian economy. Aljo, over to you.
So I think it's a very emerging area, and let me start with that. Right, and clearly, I agree with most things Vikram mentioned there in terms of how this would evolve. But let me also provide a counter view, right, to this entire thing. At least, and this is more in the interest of conversation and coming up with a consensus view rather than you know wanting to be radically different. But the whole idea, what I understand from a CBDC standpoint, is the fact that banks don't need to exist anymore, right? And you're seeing streams of that, and that's why I said let me start by saying that it can be a radical counter view, because ultimately, when you ultimately the banks have always been a distribution agency in the country, right? And the reason why you had to get branch level presence in the remote areas was because no one else knew that customer out there, right? So how could you build trust in the ecosystem? Now with CBDC out there, and with your ability to kind of run a digital currency independent of a bank account, right? And this is not fictional, right? This is happening in China today. Both WeChat and Alipay are not included in their CBDC E1 at this point, right? So essentially, you can run a parallel system. Like Vikram mentioned, you can clearly transfer the benefits to the end user. Now, China, especially in their pilots, are taking it one step further. Right? They are going to the extent of saying that all the government employees are now going to get their travel allowance into their wallet with a programmable end use, right? Which means you can use that only to pay for your metro transit or any other public infrastructure. Look at the amount of control that you're able to get, right? And clearly, with this particular use case that I've described, which is live in China, you don't require a bank or a private organization anywhere in the picture, right? So I think so now the form and fashion in which CBDC will evolve in any country will determine the role of banks, right? So clearly there will be uh, let me put it this way, right? For the use of the right politically correct word, there will be views and counter views and consultation papers and everything else out there, and ultimately we will come up with what is right fit for a particular country. But when you do that, the pure form in which this could be implemented could be compromised, and there are rightful reasons and arguments in favor of both, right? In terms of how it should be done. That's one piece. The other piece is uh, as you come up with more CBDCs and more CBDCs, more countries come up with their own specific CBDCs, especially when it comes to cross border. Uh, and you kind of start developing your own protocols, right, from the perspective of transmitting data across each other. A lot of the intermediaries that exist today, or even from the entire payment network that exists in countries, all of that become redundant, right? Because you're not dependent on their protocols. A lot of the cross-border mechanisms like SWIFT and chips, etc., exist because it is a bank account to bank account based transfer. If you kind of design it in a way that you don't need the banks in between, that becomes redundant. So again, easier said than done in a lot of ways, right? So I think, like I said, a lot of views, counter views, etc., could come up on this one, but technology perspective possible, right? Now, ultimately, it's going to become like it's going to become a function of what of the flavor on which it works on the ground, right? And there are multiple undercurrents and dynamics to the entire conversation. So clearly, the bigger argument against the entire CBDC is the Big Brother approach, right? Do you want the government to be giving you money in a way that they can track and trace every transaction of yours, right? Start creating user profiles, and this is across the world, right? And that's why I said this is a conversation more about the future of the human race than about one particular currency, right? How much of visibility should a government really have? And depending upon your school of thought, from a political organization standpoint, this can take different forms and views, right? And every country is going to come up with their own view on this one. So I think that's the interesting piece that we're learning with, that we're dealing with today. But having said that, are banks mandatory for rolling this out? I would think not.
So
Absolutely. So, yes, yes,
one
Vikram, go
quick
ahead.
addition to what he mentioned. So while I agree on what he clearly mentioned about the structure, form, and fashion in which CBDCs are rolled. So very quickly, I will subdivide CBDC, and everyone normally looks at into two sector and segment. One is your retail segment, and one is your wholesale segment. And when we look at CBDC, retail CBDC is what right now he was referring to. When you talk about wholesale CBDC, those are live up and running. Even in retail CBDC, you have a couple of them which are in pilot phases, including China, at a very advanced level of pilot. Now, when we look at wholesale CBDC, which let's say Project Ubin, for example, by Singapore government, which was started long back. Now, when we look at them, it is a part of current ecosystem itself. So that is where the bank's role will not change much. In retail CBDC, banks will be much more competitive because, as you mentioned, you will have more and more player who can just connect to the network and try to distribute it, right? And the requirement there will be that you need to be a regulated entity, and that's the reason that banks will have initially upper hand till the time you have regulated entity benchmark and stamp on you. You can start directly with that offering, right? But very soon more and more fintechs can directly get into that because you want to just manage the money via distribution channel. Today, as you know, most of the fintechs are front end for all the banks. Banks are becoming utility companies and they are providing just the way electricity or let's say water is running, right? And the way people are working with money and customer facing role, that will only increase. So bank's role will reduce, but at the same point in time, it will increase the competitiveness. That's what I wanted to add. Over to you.
Absolutely. I think, as both of you have summed up so very well, it's really a very fast evolving situation with various stakeholders coming in with their own views and arguments. And we also have to look at the diverse opinions across the various governments across various countries. And so, another related point which we can touch upon right now is about various countries working on issuing their own CBDCs and what is India's position on this matter. Harish, would you like to take this?
In India, government has been right from beginning cautious. The 2018 Reserve Bank has already cautioned the general public about the cryptocurrency, its adoption and usage, and says there is nothing prohibitory specifically, but they had just cautioned. Later on, they came out with subsequent notifications by which they banned regulated entities like banks, financial institutions, NBFCs from either dealing in doing providing any account opening, closing, and doing any monetary transactions with such regulated entities. And as a result, the entire cryptocurrency market was suffering in India.
Absolutely. LJ, would you have any thoughts on this point as well? Or Vikram?
Sorry, so
Sure.
just to come in.
Yes, go
Yeah.
ahead. Go
Sorry, go
ahead.
on, Vikram. Go on, yeah, go on.
Should I
Okay.
go for it?
So what I was trying to add is that whenever we look at overall multiple currencies and how things work together, and blockchain, whether you look at or whether you look at digital other currencies which are there, the growth of those currencies were because of two main reasons, right? One is adaptability and acceptability across the general public, and second one was that whether it is able to solve the main business problem about creating digital contract and smart contract as we call it. So that is how the use increased and started growing up. Very soon, then you were able to create innovative financial product, which otherwise was impossible in the traditional finance. So today, when you look at the yield farming or whether you look at liquidity pools, this is nothing but innovative structure which you are able to create perpetual derivative. Today, you have perpetual derivatives like in Bitcoin, Ethereum, which allows you to do dynamic risk management and hedging. You have even P2P insurance and P2P lending using crypto. So all these new products started, and governments and regulated entities who were there started taking note of this, saying that okay, certain innovations are good. Certain innovations you require to monitor and identify how to not only control but monitor, right? Because sometimes you may have a situation where the bubble goes beyond control and it may burst. So risk management wise, you need to then identify the interconnectedness. How we have seen in our earlier financial crisis in 2008 was that you had hidden correlation which nobody was able to figure out, and because of that, CDO CMO went beyond control, right? And suddenly you realize similar thing may happen, and the idea behind making sure that you have CBDC in the first place is to then allow innovation with caution and risk management supervision, everything. At the same point in time, as LG also mentioned, you have issue about making sure that you are able to provide that trust that we are not monitoring you. That is very critical. And let me tell you, today, why do you have black economy? Because people don't want to show certain things, and they are afraid that okay, government will take away everything. But at the same point in time, if you are not hiding anything, and let's say if you are making sure that the smart contracts, not government, smart contracts are managing everything, it is computer, there is no corruption possible, then that trust may come. Because once you make it more transparent, accountable, there is no possibility of any corruption. Nobody is threatening you, saying that, okay, pay me this bribe, otherwise I will report you. Then that trust makes it much more easier for people to come into the mainstream. And that is what I wanted to add beyond what Mr. has said.
Sure, absolutely. I think trust is a very important aspect of this entire mechanism. Very well said, Vikram. Eljo, you had a point. Please go ahead.
Yeah, I think again, so specifically RBI's ambitions on crypto or CBDC, crypto is not the right term, is something that I'm not very privy to. I'm not basically what I can tell you is that it is something that no country can afford to ignore at this point, right? Because your future position in the world economy, if not now, at least 3 to 5 years down the line, is going to be determined by what you've done on CBDC today, right? Because there are global positions being taken by different countries based on what their outlook and agenda is, right? So let me start giving you a few examples on this, right? So that it's very clear. So one is, I mean, obviously China, it's more about control and the fact that they want to kind of start replacing dollar at some point as a de facto trading currency, right? Like Vikram mentioned, the key reason why dollar is a de facto trading currency is because of the trust that exists out there, right? So even the European banks have got more money in dollars as compared to what they hold in euros, right, today, and that's the reality of today. All the unstable economies in the world today hold money in dollars, right? Now, the biggest challenge that China had out there is the fact that they have to buy so much of dollars to keep their currency at the price at which it is kept, right? And if there was a dollar inflation, their net worth was significantly eroded. Now, if you create a digital currency, and that is a hypothesis, and tomorrow everyone else comes along similar lines, and you can establish trade positions, right, which is independent of the US dollars. You can actually even skip the sanctions to a certain extent, and that is it is a longer term thing. It will evolve over a period of time, right? So, having said that, when these things are happening, can you afford to sit out as India, right? That's one conversation. The other conversation is somebody like an El Salvador, right? And like today, I mean, my view is what you're creating today are the Switzerlands and Cayman Islands of tomorrow, right? In a certain way. Like for instance, when you know for a fact that you've got a significantly high remittance economy, right, which is the truth of El Salvador, and given that there is so much of instability around the world, and you know that there are the odds of Bitcoin prices going up are significantly higher, why would you want to get your people to remit money back in dollars and pay that conversion fees? What business does dollar have in the entire mix? So if you create your own, if you basically legalize Bitcoin in this scenario, and you're able to basically buy a certain amount, and they didn't buy much, right? If I remember correctly, the number doesn't come to me, but it wasn't a significantly high value in global terms, right? That they bought and distributed, and they made it legal tender in the context. But what that did was it basically created so much of inward remittance in Bitcoins, right? And that's the advantage that the next couple of locations have as well. But having said that, now also in the case of El Salvador, the agenda out there was clearly to create more financial inclusion because banks had not reached everywhere. So essentially, by just opening up their Chivo wallet, they were able to include everyone, right? So I think these were the combinations. So it'll completely depend upon the strategy the government wants to take, and it could vary by different governments. But having said that, I think this is something that no government can afford to ignore today.
2 points that I would like to add to what he
Yes,
mentioned,
please.
because there are two different things that we need to look at. Right? One, about the traditional cross-border payment, which is SWIFT, which we already know, and SWIFT, for example, was initially, you can say, threatened by Ripple, saying that okay, Ripple is able to do much more thing very quickly, rapidly, which otherwise Swift is not able to do. That's the reason Swift had to innovate. Swift came up with Swift GPI, and Swift GPI then is then using that entire blockchain infrastructure to do reconciliation on a real-time basis, because you don't require effectively reconciliation once the ledger is tallied or synced. Then you are able to identify the best possible route through which you can pass on, and you can reduce the cost and time both. So that in itself is something which allows you to do innovation disruption, because there is a option available, right? There is an option, otherwise people will not do innovation. Second thing, even Visa, traditional player who is a network player, they are working with all the banks, and they have created something called Visa B2B Connect. And Visa B2B Connect today is able to do the same thing which Swift does. Suddenly, you have player like Visa coming out of nowhere and threatening Swift indirectly, because they are able to show the same network effect. They are connected to world banks, right, all over the world. And because of that, if you are able to use blockchain to do real-time settlement, again the same thing, same advantage, same benefit. So when you look at this analysis, even global central banks are thinking that rather than the today RBI does RTGS, and that is how the entire settlement works. What if you use CBDC even for global settlement? And that is where the entire idea starts, and people are today looking at first use case as a wholesale use case for global settlement. And that is what I wanted to add. Over to you.
Certainly. Thanks, Vikram and Aljo. At this stage, let me also invite our audience. I believe we have about 55 to 60 people who have joined in to this discussion. So please feel free to share your thoughts, comments, and observations in the chat box provided, and we would be happy to take this up for further discussion. So everyone, please do send across your questions to the panel. Let me now go to the next related aspect about the multitude of currencies. We see that suddenly in the last couple of years, we have just so many currencies that have emerged, digital currencies that have emerged. So we are living in the world of multiple currencies, I believe. And how do you think these digital currencies will impact the overall global economy as well as international payments? Can I invite Harish to share his views first, and then Vikram?
Yeah, multiple currencies means multiple digital currencies, MCBDC. They impact they they impact the payment or cross-border payment in many ways. In a sense, first of all, let us have a look at the shortcomings of the present system of cross-border payments. They are very slow, taking time. Depending upon the various global banks and counterparty arrangements, there were restricted hours of settlement. Cost because of counterparty arrangements, cost has gone up, and it takes a longer time in settlement. As a result, there is a lot of suffering by customers. There is sometimes truncated data or lost data. Data doesn't get transmitted correctly, and because of all these limitations, people have been on cry for a long time that settlements on international global settlements have not been being properly. Now, because CBDC is coming into effect, banks for international standard BSF has conducted a in-depth study, and they have studied various models, based on which they came out with a report in July 2021, in which they have enumerated three modules. First module highlights the arrangement based on compatible CBDC programs of each participating countries. Second is the arrangement based on interlinked CBDC platforms. And third is having a MCBDC interconnected with a single technical technology platform, in which interface can be through through single platform, and every banker, every participating bank will have a smooth flow. So under the first interlinking arrangement, compatible arrangement, I will say, the CBDCs are run under both the three systems. CBDCs settlements, global settlements are available round the clock, 365, 24 by 7, and therefore and takes instantaneous settlement. In the second, there are certain common arrangement between the participating central banks, under which they have agreed that what type of protocols, what type of timings, and settlement cost and fees will be there. So an exchange rate, foreign exchange rate is involved in the second type of module. And under the third type of single platform arrangement, there is a preset single platform to which every participating central banks have agreed that they will adopt to that technology platform and will participate through that. So it actually enables the smoothest functioning, but it's in reality it is difficult to implement. So second and first one, like a CBDC arrangement based on interlink or compatibility of platforms, will be more useful.
Sure. So just
Certainly.
to add to
Yes, Vikram, go ahead.
Correct. So just to add to what he mentioned, so there are three different areas. I have partially answered this earlier as I discussed and answered Elijah's question. So if you look at, you have Swift coming up with Swift GPI, and even Visa coming up with Visa B2B Connect. But along with that, when you look at central bank coming together and creating a single network or consortium for that matter, is going to work very well in a long term. There are already few people who are working on multiple things. As Mr. Harris mentioned, you have MBridge, which is allowing you to have interoperability across multiple different networks. And when you look at it, is very interesting. Most of the people are not aware that a few years ago, Bill Gates Foundation, Bill and Melinda Gates Foundation, they had, along with the Ripple, they had financed a project called Moja Loop. Now, this Mojalu project effectively is similar to NPCI's UPI, but on blockchain. So when you think about that, those kind of projects are going to work in a way that a country which is emerging economy, not knowing much about how to implement blockchain, can simply copy paste and start customizing for their own use case. So that increases adaptivity, and you have even adoption index going up because of that. Second thing, you have it more accessible because more and more people are able to understand. You are removing the technical knowledge completely. You are just making it easy to use, easy to understand. So that abstraction that we talk about will make it much more easier to use. And last part, when we look at it, international cross-border remittance, there are multiple different ways people can look at that. And when we look at, people always ask this same question that, look, we already have digital currency, as we call it. Normal currency also is digital, right? You know that entire money that you have is in your bank, and that is digitally represented. It is not physical cash lying somewhere. Now, what do you mean by central bank digital currency? Because this existing currency also is digital currency. So we need to understand the difference between these two. First of all, what is that you are able to bring once you are bringing today's digital currency on the blockchain? The moment today's digital currency that you have, you bring on blockchain, you are unlocking two benefits. First benefit, it becomes transparent, traceable, governance is possible, so on and so forth. Second thing, because it is on blockchain, you can then use interoperability, as we discussed, and then connect with any other system. And because of that, you are able to make sure that smart contracts can run irrespective of parties involved. So even governmental smart contract, which I discussed earlier, like taxation smart contract, or whether it is indirect tax, or whether it is something where you are trying to innovate something, right? All these different things you can use once you have this on blockchain. All the advantages of blockchain: immediate settlement, immediate reconciliation, making sure that there is a smart contract which will run irrespective of people being there or not. All those advantages you are able to bring on top of the existing digital currency that you are keeping in bank, right? So that is the first thing which I wanted to highlight, because many people will have this question. And second thing, once you have done that, once you have multiple central bank coming up and saying that, okay, we are creating consortium, and through this cross-border remittances, you will have cost which will go down drastically. Today, the cost of transaction is around 5%, right? You know that. And the moment you make sure that this entire ecosystem is on blockchain, it will be in few cents, or let's say a few basis point. And because of that, it will increase the cross-border remittance, first of all. Second, today, as you know, right, along with current account fungibility, we are talking about capital account fungibility also. And very soon, once that happens across the globe, that will be the true uh, scale at which you will see the international remittance and transactions. That will be allowed and enabled by this sort of technology, where CBDC can help you with scaling up of the operation, creating the transparency, and allowing everyone to participate. Over to you.
Thanks. So I think the debate so far has resulted in a lot of inquiries. We've been getting questions from our audience, and the first one is from Dr. Geetika, and she's actually talking about the impact of CBDCs on implementing effective monetary policy. Would somebody like to take this?
Sure, if you want, I can take it, and then maybe
Sure.
others can add.
Sure.
Right. So now, when you look at current scenario of COVID-19, right? Understand that today, whenever you are trying to create any policy, you first require data. Whatever you can't measure, you can't control. So you require data where it is, let's say, the most impactful, COVID-19, where all the transaction flows are reducing. You have economics concept like marginal propensity to consume, save, and then also you have multiple different concepts in macroeconomic environment which interacts among itself, and then suddenly you have very dynamic output. And when you look at CBDC, first and foremost thing it allows you to do is monitor and trace. And because of that, you can identify on a real-time basis where the flow of money is reducing, where it is increasing, whether you want to deploy that in a productive channel where it is currently deploying or not. All those things you are able to monitor and get insight. That is number one. Second thing, once you get that insights, the flow of money, as we call it, like you have M1, M2, other numbers. But when we look at flow of money as a whole, you have couple of things that people normally get insights very late, because you have CRR SLR ratio. Because of that, whatever you change, what is the final impact on the liquidity? Because there are so many things you do. You have open market operations, then you have interest rate policy, fiscal policy, basically, where again based on that something will change. And when you are changing CRR SLR ratio, at that point in time, again you are controlling the liquidity. So how this liquidity is getting impacted, and how this increase in liquidity or decrease in liquidity is going in the entire economy, this entire thing you can measure and monitor. And because of that, your next policy can be much faster, much more accurate, more improved, and more effective. That is what I wanted to highlight. Over to you.
Thanks, Vikram. Aljo, Harish, any point on this?
No, I think I started off with this earlier, right? Which basically said that in today's era, no country can afford to not have a policy around this, right? Because if you're not starting your thought around this and your view around this at this point, right, or creating a forward-looking view, you will be left out, right? Not immediately, but in a 3 to 5 year horizon. Now the biggest problem, when you kind of look at the economy and the monetary policy, what you got to look at is the fundamentals of it, right? I mean, we've traditionally followed the gold standard, and based on the gold standard, you've been able to control the liquidity in the market to that extent. Now, the challenges that you face is when you bring in an alternate currency like Bitcoin, which is not linked to the gold standard, and when that capital gets infused in your in your economy, right? Either as an asset class or as I mean, I wouldn't say legal tender just yet, right? I mean, it's too far fetched, I would think. But so how do you handle that, right? How do you handle this extra liquidity that you can't control, right? So, like Vikram clearly mentioned, I mean, earlier you would basically just play with the CRR and SLR and essentially figure out what the liquidity position of the market looked like. Now, with the CBDC, you can do it much more effectively, right? In a lot more detail because it's ultimately programmable currency. Like for instance, China is now experimenting with currency with an expiry date, right? Which basically says that, and see, this is where trust comes in again, right? Because I mean, the moment you start doing this and people start losing confidence, then I don't know whether you can do this anymore, right? So, but the whole idea is if you want to create a short spot in spending, and you put in with a programmable end use, right? Which says I'm putting in so much money into the bank accounts of the marginalized only for spending on food or pharma, right? I mean, that sort of intervention you can't do today. You have no way of doing it. But is that the sort of intervention you should be doing as a government is another question, right? So clearly there are possibilities, right? And ultimately it's a tool, and we can what we are hoping for is that through debate and conversation we come to the right middle ground on using such a powerful tool.
Right. We have got another very interesting question from Vikas Agrawal, and this one is my favorite too. He's saying that unlike traditional financial instruments, the cryptos are not backed up by any asset class, and the value basically fluctuates and impacted by demand and supply. So, how do you think their value is going to increase, given that they have this fundamental common to all fiat currencies isn't applicable to them? So, what is your view on this, Vikram? May I ask you to
Sure.
go ahead first?
Sure. So let's look at first of all how the traditional currency, like let's say INR, gets its own value, right? So we think that okay, of course there is a promise to pay by government, and because of that you are having that trust, and that's why we call that as a fiat currency. It is deriving that value from the trust. Now, if enough people are not believing that there is a promise to pay, which will be honored, then you will not have that value. And that's the reason you have seen multiple countries where the issue has arisen that suddenly it is having no value or it is inflating so rapidly that people are not able to use it at all. Now, when we look at from the other hand, cryptocurrencies are also gaining value from the network and the trust that you are able to garner because of the algorithm that they are using. We need to notice, however, that all the cryptocurrencies are not going to be without any backing. There are certain cryptocurrencies which are, in a way, backed by tokens or backed by some assets. You have gold back and some of the other stable coins, as we call it. They are backed by some of the different assets. So that is a very different class of cryptocurrency. But if we look at just fiat equivalent cryptocurrency, where it is just creating value out of trust, then the value that will go up will depend on two different factors. One, what is the total supply of that? And second, the current market demand and how the supply is marginally increasing, right? Because current demand, the way it grows due to network acceptability and network increasing, it will get impacted automatically if the supply is not increasing. Bitcoin, what is happening? You have demand which is increasing. In fact, today, if you look at 95% of the Bitcoin is held by around 3% of the addresses, wallet addresses, not even people, 3% of the wallet addresses. And when we look at remaining 5%, we can call it as a free float market cap in a way. So even if you consider 10%, let's assume that there are certain exchange wallets, and because of that, even if you consider 10% free float, now you know that new mining will happen slowly because every 4 years it reduces by half, and because of that, you have overall maximum limit in Bitcoin at 21 million. out of which around 19 millions are already mined. Okay, so you are talking about 2 million additional Bitcoin. With the same thing, the demand is increasing because more and more people are becoming aware of it. Bitcoin, being the oldest one, is used for some of the other cryptocurrencies to create and let's say hold some uh, trust out of it. And because of that, what is happening overall? You have Bitcoin value continuously increasing. But if suddenly people are saying that okay, it is not allowed internationally, it is illegal suddenly, and people are not using it, you will find the same thing. The trust will go away, and people will not accept it anymore, and value will go down. It is a supply and demand dynamics along with the trust, same as the normal currency that we already know about. Over to you.
Yeah,
I would
as
like
you,
to,
yes, Harish, go ahead.
in addition to the Bitcoin having trust factor or we are not having any asset backing, there is a use case for those who are doing some illegal business or don't want to get themselves traced. So till the time that use case is available, Bitcoin is in demand and it will continue to be in demand.
Absolutely. So we have got a series of very interesting questions. I'm not sure due to the paucity of time we'll be able to take most, all of them. But we'll try to see, if we can take at least a couple of them here because each of those would require a detailed examination. So the next one which we have is from Mr. Shashank. It's about smart contracts and transactions that depend on mining. And he mentions that currently mining is done only by a few countries. And so, what do you think how the future will be for mining? So, it's not directed to any specific panel member. He's also talking about, as of now, the gas fees are on a higher side. And so, transactions are expensive. And will there be more ecosystems coming at lesser gas fees? So, quite a few related topics have been
I
put
will
together.
summarize it
Yes.
very simply.
Yes.
And the answer to that is very simple. You have, because of the issue that you are outlining, you have proof of stake becoming more and more popular. Proof of work uses a lot of computing power. Proof of stake is similar to, let's say, creating and distributing lottery, and that whatever profit you get out of it, you are keeping that as a deposit. So if you are acting against the network, your deposit is then forfeited. And that network that we are talking about, even Ethereum 2.0 is going to work under proof of stake rather than proof of work. That will have major impact on gas price, and major impact that apart from Ethereum that you look at, right? There are so many other currencies, even Cardano, for example, and few more. They are having very different way of looking at how the mining is done. Today you have block DEGs also, which are not traditional chain, because in chain you have one after the other and they are interlinked. Here you have in fact mesh or network, where you have one connected to multiple different things, and that mesh or network allows you to make it much faster. For example, IOTA network, they are allowing you to put one transaction when you are verifying two existing transactions, which means that more users are using that, it will in fact make sure the existing transactions are getting accepted very quickly, because to add one you need to verify two existing ones, right? So there are multiple different ways people are coming out with some of the innovative ideas how to create consensus, because whatever mining we are talking about, why do we mine? We are mining because we want to create consensus, who to trust, how many people are agreeing to that number, and based on that we are agreeing whether to accept this set of transactions to blockchain or not. That's it. Over to you.
Any other point, anyone? Yes, Harish, you have. Yeah, go ahead.
I would just like to ask Vikram whether it would be possible at any point of time, since CBDCs are also blockchain based and running smart contract on them may be possible, and instead of using the cryptocurrencies like Ethereum, whether it can be possible that some tagging of the pricing can be done and smart contract becomes more effective, particularly for small value smart contracts.
So definitely, in fact, when you look at, whenever you are creating public permission network of your own, you can have your own smart contract running on top of it. But what you will require to make it more scalable, acceptable, is that you are using some of the existing infra which is tried and tested, like maybe Hyperledger or Coda or whatever. Right? You start with that, or you start with Ethereum also. That is also fine. But once you start with some network, either of your own design or something existing, then you will require external connectivity, and that is possible through oracles. Because whenever you are talking about external data point on blockchain, when you want to act upon external data, like let's say price movement or you want to identify, okay, in P2P insurance, you want to identify whether the flight is delayed or not. All this data will come from the real world, and these APIs that we are talking about should come through Oracle. Oracles are nothing but service which are on blockchain, and since they are also smart contract, they can speak to another smart contract. So effectively, you are able to create that, and it is possible to have CBDC driven entire ecosystem running this smart contract, and other blockchains are connecting to this. And that's the reason you have multiple protocols like Interledger protocol. You have new protocols coming up every day where you can connect with multiple blockchain through middleware. So that is very much possible. And one quick question which I will answer on the Elon Musk side, that why he refused to accept Bitcoin after accepting it earlier. So there are multiple things. You know, in media there are so many things which were coming, and one of the major reasons is that their major revenue source, if you look at, is through carbon trading. And the main reason, when you look at on the carbon trading side, what happens, right? If you are looking at on the Bitcoin, the emissions because of how the mining works is very high, and because of that, if you are becoming negative in eye of that carbon trading authority, then you might suffer. So to make sure that you are not suffering on that side, most of the people are saying that because of that, Elon Musk took U-turn, and then he started saying that no, I will not accept because it is not energy efficient.
Thanks, Vikram. Harish, I would like to, at this point in time, bring in your experience, and would you like to make a brief, annotation about the legal and regulatory hurdles that the currencies, digital currencies might face in the
Hmm.
future?
The basically regulatory requirements or regulatory compliances requirements relating to crypto assets or say cryptocurrencies are focused mainly on three areas. One is mapping crypto assets or defining what is crypto assets. Secondly, to include the establishing clear regulatory parameters and covering all the ecosystem participants or players. And thirdly, is limiting the technological capabilities. So first one we take, so there are no clear definitions about what is cryptocurrency. Throughout the world, various central banks or other regulatory authorities have defined cryptocurrency or digital assets or say virtual currencies like that. So they have incorporated legal parameters accordingly and try to regulate assets like that. Second is it's a more focusing on only covering the coin creation and issue of coin ICO. Uh, Less focus is there on covering the intermediary parties, particularly those who are new to the crypto assets related business, like miners. And regulations are most focused on that. Very few countries, particularly small economies, have developed their regulations, which are called new regulations, totally related to cryptocurrencies. You can say bespoke regulations. The countries which we can refer is Bahama, then France, which has just come out with the bill, then Gibraltar, Israel, Malta, Mexico, Russia, which has now already come out with a federal law on digital financials, and Thailand. The second type of economies or regulatory countries are there which have not brought out the totally new act or laws on that, but are retrofitting their existing regulation with the authorization to cover this, put restrictions on the existing under that existing law, like AIML or terrorist funding prohibition. So making a requirement on licensing or getting registered, keeping watch on their activities, and on the creation of ICO, crypto coin creation or coming out with ICO, there are also particularly laws related to securities are covered. From Indian perspective, we have got a we are falling in the third category, which says the old regulations are continued and we have tried to fit in that. So that is accepting like China, India, Hong Kong, South Korea, Switzerland. Earlier Switzerland, now they have come out with the new guidelines, but under the law, all existing law. So all these are now either putting a requirement to control the activities or regulating the activities with registration or certain ICO related compliance with like security issue, and getting license and regulating the reporting and other requirements.
Thanks. Harish, Aljo, and Vikram, thank you so much for that wonderful and insightful discussion. I think we have also covered most of the questions, and it was so very nice to know the much deeper aspects of this whole new phenomena of digital currencies and cryptocurrencies. And as we have seen, that there are just so many stakeholders with their own priorities, and they look at this entire ecosystem from a very different angle. And to add to this is this cross-border nature of this whole phenomena, and the role of the government, and how it requires for a much wider participation by various stakeholders. So it's a very fast emerging scenario, as you all have mentioned, and you have brought out very interesting insights. I'm sure this discussion would go a long way in benefiting our viewers. And so this is not an end in itself. I would encourage all the audience to keep posting the comments, and we would be happy to take a look at it. Thanks very much once again to all the panel members, and thank you to all the members of the audience who are present here and have interacted with us through this panel. Wish you all the very best. Good luck and goodbye. Thank you.
Thank you.
Thank you.
Thank you.
Bye bye.
Thanks. Thanks.
See you all.